Okay, do you hear me well? Do you see the presentation, role of technology?
Yes, we do.
Yeah, great.
Yes, Professor.
So let's go on. Now let's talk about the role of technologies in financial innovations and in digital finances. This is a fascinating topic that sits at the intersection of finance and technology, and I'm really excited to explore it with you. So, in this lecture, we will examine how various technologies have transformed financial services throughout history and continue to drive innovation today. And we will look at specific examples of financial technologies, their impacts, challenges, and future potential. And this understanding is crucial, really, for anyone planning to work in modern finance or in fintech sector. And let me set the context of our discussion. First of all, every major advancement in financial services, from the first coins to today's blockchain networks, has been enabled by technological innovation. And as future finance professionals, for example, or the current finance professionals, you'll need to understand not just the technologies themselves, but their broader implications for business models, customer experience, and regulatory compliance. And throughout this lecture, I'll be sharing real world examples and data points to help you to illustrate this concept. And I encourage you to think critically about how these technologies might shape the future of finance during your careers, for example. The next slide. Let me start by giving you a broad perspective on what we mean by technology in the context of financial innovation. So it's important to understand that technology isn't just about computers and smartphones. It's any tool or system that helps us accomplish tasks more efficiently. And when we look at the evolution of financial technology, we can trace a fascinating journey from the most basic tools to today's sophisticated AI systems. And think about it, the abacus was once cutting edge financial technology, just as artificial intelligence is today. And each innovation built upon previous ones, creating increasingly sophisticated ways to handle money and financial transactions. I would like to emphasize that technology in finance is really about problem solving. So, when and whether we are talking about ancient accounting tools or modern automated trading systems, the fundamental goals remains the same: to make financial operations more efficient and reliable. And the key difference is the level of sophistication and the scale at which we can now operate. And the definition on our slide captures this perfectly. Like technologies encompasses everything from basic tools to complex systems. But what's particularly interesting for us in finance is how these various technologies come together to create entirely new possibilities for, in particular, financial services. And we will explore many of these throughout our lecture. The next slide. Now, let's break down the three main types of technology that are particularly relevant to financial innovation. Each of these categories has played a crucial role in shaping modern financial services. First of all, and let me start with the mechanical technology, which might seem basic but was revolutionary in its time. So think about the first mechanical calculators used in banks, or the sorting machines that revolutionized how we handle physical cash. And these mechanical innovations laid the groundwork for everything that followed. Moving on the electronic technology, this was truly a game changer for the financial industry. And when banks first introduced electronic systems for record keeping and transactions, it completely transformed how we handle money. And electronic technology gave us the ability to process transactions at speeds, for example, that would have been unimaginable in the mechanical era. But the real revolution, and this is what most excites me, came with digital technology. And the ability to encode everything with binary format opened up to possibilities we're still exploring today. For example, when we talk about AI and banking, or blockchain, or automated trading systems, we're usually talking about digital technology. And what makes digital technology particularly powerful is its ability to process information in ways that mimic and often exceed human cognitive capabilities. And I find it actually fascinating how these three types of technology often work together in modern financial systems. For instance, an ATM combines three of them: mechanical parts for dispensing cash, electronic circuits for processing, and digital technology for security and account management. So the next slide. Let us share something really compelling about the impact of technology implementation in financial services. So the data we are seeing is quite remarkable, but I want to highlight three key benefits that make technology adoption absolutely crucial for staying competitive in today's financial marketplace. First, let's talk about increased efficiency. So, in my experience working with financial institutions, I've seen firsthand how implementing new technologies can transform operations. So, we're not just talking about minor improvements, we are seeing fundamental changes in how quickly and accurately financial institutions can process transactions, analyze data, and serve customers. So, the second point, which I found particularly interesting, is about competitive advantage. So, in today's financial landscape, being an early adopter of new technologies, it's just about saving money or staying current. It's about survival, even. So the institutions that move quickly to implement new technologies often capture significant market share before their competitors can catch up. And let me share a striking statistic from McKinsey, for example, that really drives this home. For example, early adopters of automation are seeing for about 20 to 25% boost in productivity. And this isn't a small incremental gain. It's just a game-changing improvement that can completely reshape a company's competitive position. Think about what 25% productivity boost can mean for a bank's operating costs and to customer service capabilities, for example. And this number make it clear financial institutions cannot afford for to be passive about technology adoption, and competitive landscape is simply too intense, and the benefits are too significant to ignore. The next slide. Let me explain why technology adoption isn't just an option in financial innovation. So it's absolutely essential. I want to break this down into three critical aspects that demonstrate how deeply intertwined technology and financial innovations have become. So first, let's consider new financial products. So in today's market, virtually every new financial product has a significant technology component. Whether we are talking about instant payment solutions, automated investment platforms, or digital lending products, none of this would be possible without extensive use of modern technology. And I've seen numerous financial products fail simply because they didn't leverage technology effectively, though. So, the second point I want to emphasize is about financial innovation itself. And what's fascinating is now dependent modern financial innovation it has really become an emerging technologies. So we are not just using technology to make existing process faster. We are using it to reimagine even what's possible in finance, and the ability to manage vast amounts of data, automate complex processes, and reach customers through digital channels has really become fundamental to financial innovation. And here's a striking figure that puts this into perspective. For example, fintech startup funding reached for about 210 billion globally in 2023. And this massive investment tells us something important about where the industry is hidden. And the market is clearly betting big on technology driven financial innovation. And this trend shows no signs of slowing down. And these numbers trends make it clear you simply cannot separate financial innovation from technology adoption anymore. They have become two sides of the same coin. The next slide. Let me share with you one of the most successful examples of financial technology innovation, the ATM. So it's a perfect case study of how technological innovation can transform banking operations while simultaneously improving customer experience and reducing costs. So the first major breakthrough was 24 by 7 cash access. And before ATMs, if you needed cash outside of banking hours, so you were simply out of luck. And this might seem basic to you now, but imagine the revolutionary impact this had on customers' lives when it was first introduced, for example. It fundamentally changed people's relationship with their money, giving them unprecedented access and control. And now, let me share some fascinating numbers about the cost implications. When a customer conducts a transaction with a human teller, it costs the bank over $4 per transaction. And the same transaction in an ATM, what? So just 25 cents. So that's a reduction of more than 90% in transaction costs. So, and this dramatic cost difference made it possible for banks to offer more services while keeping fees reasonable. But there's another aspect that's equally important, the reduction in the need of physical bank branches. So, ATMs allowed banks to maintain customer service levels while significantly reducing their brick and mortar footprint. So this was a win-win situation in common generally because customers got better access to their money and banks could operate more efficiently. So, um, and this is why I consider the ATM one of the most successful financial innovations in history because it perfectly balanced customers' needs with business efficiency. So now let's talk about another revolutionary advancement in financial technology, which is online banking. So I want to share with you how this innovation fundamentally transformed the relationship between banks and their customers. Let us think about account management for a moment. Before online banking, every single banking task required either a phone call or a visit to the branch. And now, otherwise, customers can manage their entire financial life from their laptop or, uh, for example, desktop computer. So I even remember when this was first introduced, the ability to check your balanced instantly anytime, which was considered almost magical. But the real time changer came with features like bill pay and transfers. And these features completely eliminated the need for paper checks and physical bank visits for many common transactions. And when I think about the impact, it's not just about convenience, it's about giving people back their time and putting them in control of their finances, even. So here's a striking statistic that shows the impact. For example, online banking reduced branch visits by up to 25%, and this represents a massive shift in how people interact with their banks. So the beauty of this change is that it benefited both parties. For example, customers got a much more convenient service, while banks significantly reduced their operational costs. So, the success of online banking really set the stage for the digital banking revolution we are experiencing today. It showed that customers were ready and willing to embrace digital financial services when they offered clear benefits. So, the next slide. Now, let me explain why big data analytics represents such a revolutionary shift in how banks serve their customers. So, this is one of the most exciting developments I've seen in my career in financial services, indeed. And what makes big data analytics so powerful is its ability to process vast amounts of information from multiple sources, both, for example, structured and unstructured as well. And we are talking about everything from transaction histories to social media interactions, and even from spending patterns to life events. But here's what's really fascinating. It's not just about collecting this data, it's about making sense of it in ways that create real value for customers. So, and now let me give you a concrete example. Today, banks can analyze a customer's spending patterns, income flows, and life events to in order to proactively offer relevant financial products. And you can imagine a customer who is who has just increased their savings rate and is borrowing real estate websites. The bank can now identify this partner and offer a tailored mortgage product before the customer even asks. And this level of personalization was simply impossible in the past. And for example, when I started in banking, personalization meant putting the customer's name on a form blank or on a form letter. And now we can create truly individualized experiences based on each person's unique financial profile or behaviors and the other needs. And it's not just about selling products anymore, it's about providing the right financial solutions at exactly the right time, you know. Um, and this is what I call true uh, personalization powered by data, and it's transforming the how financial institutions interact with their customers. So now let me share with you one of the biggest challenges financial institutions face when implementing new technologies, the significant upfront investment required. And this is actually something I've seen many institutions struggle with. And it's crucial to understand the scale we're talking about. So, when we talk about implementing new technology in financial services, we are looking at investments that can range from tens of millions to well over $100 million. And this isn't just about buying new hardware or software, and it's a comprehensive investment that covers multiple areas. And we are talking about purchasing new systems, setting up cloud services, building network infrastructure, training staff, and perhaps most challengingly, integrating everything with existing systems. And what I find particularly interesting in the ROI equation here, for example, while these investments are substantial, they can definitely pay off in the long run. However, and this is crucial, success requires two key elements: diligent change management and patience. And for example, I've seen institutions rush this process and end up with expensive systems that their staff either can't or won't use effectively. And the key message I want to emphasize is that while these investments are necessary for staying competitive, they need to be approached strategically. It's not just about throwing money on new technology, it's about making smart, calculated investments that align with your institution's long run goals and capabilities. So, the next slide. And now, let me address one of the most challenging aspects of technological transformation in financial institutions, which is the integration of new systems with legacy infrastructure. This is an issue. I really have seen it as a cause of significant headaches across the industry. And here's the reality that many financial institutions face. So they're running on mainframe systems that might be decades old, yet these systems are still processing millions of critical transactions daily. And you can't just turn them off and start fresh. So what's particularly challenging is that these legacy systems weren't designed with modern integration capabilities in mind. So let me share a striking figure that illustrates the scale of the challenge. For example, you may know that top banks spend over $15 billion annually just on integration efforts. So that's an enormous investment, but it's still absolutely necessary because seamless integration is critical for delivering what customers expect today. For example, a consistent omni-channel experience. And you should think about it in this way. When a customer makes a transaction on their mobile app, that information needs to flow seamlessly through possibly dozens of different systems, some modern and some legacy, and all of this needs to happen in real time. And the complexity of making all these systems work together is staggering, yet it's absolutely essential for modern banking operations. So this is why I always emphasize that digital transformation isn't just about adopting new technologies, it's about making them work with what you already have. So the next slide. So now let me address what I consider one of the most critical challenges in modern financial technology, the exponentially growing cybersecurity risks. And this is, in fact, something that keeps many financial executives awake at night and with good reason. So, as we move forward uh, through the financial services uh, and online financial services and into apps, so we are essentially creating new entry points for potential cyber threats. Every new digital service, while providing convenience to customers, also presents new opportunities for hackers. So, data breaches, for example, and various forms of cyber fraud. And this is not just a theoretical risk, it's a daily battle. Let me share now relevant statistics. For example, JP Morgan alone spends for about $600 million annually just on security, on cyber security. And that's a staggering figure, but it reflects the scale of the threat. For example, when I talk to banking executives, they often tell me that cybersecurity is no longer just an IT issue. It's a fundamental business risk that requires constant attention and investment. And financial institutions are responding with multiple layers of defense. For example, advanced encryption, sophisticated firewalls, biometric authentication, and more. But what's fascinating is that this is essentially an arms race. So, as security measures become more sophisticated, so do the threats, indeed. And the key message I want you to take away is that cybersecurity isn't just a theoretical challenge, it's a fundamental aspect of financial innovation that must be built into every new service from the ground up. So, the next slide. Now, let me address a critical challenge that often gets overlooked when implementing new financial technologies, which is user acceptance. And I would say that in my previous experience, this human factor can make or break even the most technically sophisticated solutions. So what I have observed really repeatedly is that people may resist new technological, new digital financial tools for various reasons. Sometimes it's simply a lack of understanding about how to use them. Other times there is a deeper distrust of digital banking solutions. And in many cases, particularly within financial institutions themselves, there is fear about job automation. And let me share a practical example I've encountered. For example, a bank might implement a state of the art digital payment system, but if customers don't trust it, so you find it too complicated, or they will simply continue using traditional methods. So, this is why I always emphasize that successful technology implementation isn't just about the technology itself, it's about how we introduce it to users. And this is where proactive education and training becomes absolutely crucial. For example, we need comprehensive change management strategies that address both customer education and employee training. So I've seen many cases where, for example, excellent technical solutions failed simply because not enough attention was paid to the human element of adoption. So, and you should remember here finally that technology is only as effective as people's willingness to use it. This is why user acceptance should be a key consideration from the very beginning of any fintech implementation. We have switched to the next slide, and let me emphasize a critical aspect of implementing emerging technology in finance. That is the need for specialized talent. So today, I want to share with you why having the right technical expertise is absolutely crucial for financial institutions. So, turning back to my experience working with banks and fintech companies, so I've observed actually that specific technical skills are becoming increasingly vital. So we are talking about expertise in artificial intelligence, in machine learning, big data analytics, in cloud computing, and blockchain technologies. So in user experience design and cybersecurity as well. These aren't just buzzwords. So your fundamental, no, they are fundamental competencies needed to build and deliver the next generation of digital financial services. Let me give you one of the examples. For example, JP Morgan, one of the world's largest banks, currently employs over 50,000 technology specialists, and this number alone shows you the scale of technical talent needed in modern banking. However, not all financial institutions have the resources to maintain such large technical teams. That's why we are seeing an interesting trend. Uh, that is, many banks are choosing to partner with fintech companies to access this specialized talent pool. And this reality is that without these technical specialists, financial institutions simply cannot compete in today's digital first environment. And every new financial product or service now has a significant technical component that requires expert implementation. So, the next slide. Now, I'd like to discuss a crucial factor that shapes the landscape of financial technology, which is a regulation. So, this is a fascinating area where we see the constant interplay between innovation and control. From my work in the industry, I can tell you that governments worldwide are trying to achieve a delicate balance. So, on the one hand, they want to establish prudent consumer protection guardrails. After all, we're dealing with the people's money and sensitive financial data. But on the other hand, they aim to promote innovation and foster new competition in the financial sector. So, and the regulatory framework has a profound impact on how we develop and implement new financial technologies. And you may think for is about various aspects like data privacy requirements, capital requirements for financial institutions, and lending practices. And these regulations directly influence what we can and cannot do with the new technologies. So, what I find particularly interesting is how different countries approach this balance. For example, some jurisdictions like Singapore have created regulatory sandboxes where fintech companies can test innovative products under controlled conditions. Otherwise, the others have implemented strict guidelines around data protection and consumer rights. And these regulatory decisions ultimately shape the emergence and adoption of new financial technologies. And so it's worth it emphasizing that understanding these regulatory requirements isn't just about compliance, so it's about knowing how to innovate within established boundaries, while, for example, simultaneously ensuring consumer or customer protection. So the next slide. So, and here I'm really excited to talk about blockchain technology, which represents one of the most significant innovations in financial technology. So, now let me explain why this is such a groundbreaking development. As its core, blockchain technology enables something truly revolutionary, which is the ability to conduct secure peer-to-peer financial transactions without the need for traditional centralized intermediaries. What makes this particularly powerful is the transparency it brings to transactions. And every transaction is recorded on a distributed ledger that can be altered, for example, creating an unprecedented level of trust and security. So, and let me share some practical applications we are seeing today. So, beyond its well known use in cryptocurrency, blockchain is now being utilized for smart contracts, supply chain tracking, and various other financial applications. So, and what's particularly interesting from a business perspective is the potential cost savings. For example, estimates suggests that banks could save between 8 to 12 billion annually, $1 billion annually by implementing blockchain technology. And the implications of this technology are far-reaching. Because if you think about international transfers that currently take days and involve multiple intermediaries, blockchain can, for sure, potentially execute these transactions in minutes with complete transparency. And this is why I believe understanding blockchain isn't just optional anymore. It's becoming essential for everyone, for anyone working in modern finance. So the next slide. Uh, Now I want to talk about something that fundamentally changing how we analyze financial data, which is the combination of artificial intelligence and machine learning. And this is truly transforming the financial services landscape. So, what fascinates me about AI and machine learning is their extraordinary ability to process and make sense of massive amounts of data. Because these technologies can identify complex patterns that would be impossible for humans to detect manually. And by leveraging big data sets and sophisticated machine learning models, so we can now derive predictive insights and make recommendations with unprecedented accuracy. So now let me give you a practical example of how this works in finance. When we talk about hyper personalized financial planning, so we are talking about AI algorithms analyzing thousands of data points about the customer's financial behavior, about also life events and market conditions, which is to provide tailored recommendations. And in fraud prevention, for example, machine learning models can detect suspicious patterns in real time, analyzing transactions across millions of accounts simultaneously. And what's particularly exciting is that we are just scratching the surface of what's possible. So, as these algorithms become more sophisticated and our data sets grow larger, the potential applications in finance continue to expand. And this is why I believe AI and machine learning are becoming core competencies for modern financial institutions. The next slide. So now let's talk about something that's revolutionizing the banking industry, which is API or application programming interfaces. So I'm really particularly enthusiastic about this topic because it represents a fundamental shift on how banking services are delivered. So what makes API so transformative is their ability to enable third-party fintech companies to build complementary applications and services that integrate seamlessly with bank platforms. If we think about the APIs as secure bridges that allow different financial systems to communicate and share data with each other, this creates what we call open ecosystems for collaborative innovation. So let me give you a concrete example from the European Union's Open Banking Initiative. For example, banks are now, according to this initiative, banks are now required to provide APIs that allow authorized third-party providers to access customer account information and initiate payments with the customer's consent, of course. And uh, this has led actually to an explosion of innovative financial services and applications. And the beauty of this approach is that it allows banks to leverage external innovation while maintaining control over their core systems. And instead of trying to build everything in house, banks can partner with specialized fintech companies to offer new services to their customers. And this is creating a more dynamic and competitive financial services landscape where innovation can flourish. So, Now I'd like to discuss a technology that's fundamentally changing how financial institutions manage their computing resources. So, which is called a cloud computing. So, this is a game changer in terms of operational capabilities. So, what makes cloud computing particularly powerful is its ability to provide a non-demand access to vast computing resources. And if you think about it, financial institutions can now access enormous amounts of computing power, data storage, and bandwidth, and scale these resources up or down instantly based on their needs. And this is a radical departure from the traditional model of maintaining fixed IT infrastructure. So, and I can give you a practical example of this, why this matters. So, for example, during periods of high market volatility or peak trading sessions, financial institutions experience massive surges in demand for their services, for example. And with cloud computing, they can immediately scale up their computing capacity to handle the spikes and then scale back down when the demand normalizes. And this kind of flexibility was simply impossible with the traditional IT infrastructure. And what I find particularly exciting about cloud computing is how it enables innovation. So, because financial institutions can now experiment with the new services and applications without making massive upfront investments in hardware. They can, for example, test, iterate, and deploy new solutions faster than ever before. And this is truly transforming how financial services are developed and delivered. So, the next slide. And now let's dive into one of the most disruptive innovations in finance, which is cryptocurrency. And this is a topic that's fundamentally changing our understanding of what money can be in the digital age. So what I find here is about the cryptocurrency space is its explosive growth and diversity. So we now have thousands of different cryptocurrencies, with Bitcoin and Ethereum being the most well-known. But these digital currencies enable something remarkable. For example, the ability to transfer money globally without the need for traditional central banks or financial intermediaries. So let me put this into perspective with some numbers. First of all, the global cryptocurrency market cap has exceeded $2 trillion. And that's a staggering figure that demonstrates the scale of this transformation. However, I should point out that major volatility remains one of the key challenges in this space, and the value of cryptocurrencies can fluctuate dramatically in short periods. So, now a few words about something that is transforming how most people interact with the banks, a mobile banking. I mean, this is a perfect example of how technology can fundamentally change consumer behavior and expectations in finance. So, the most exciting thing is here about mobile banking is how it's completely redefined the concept of banking accessibility. And through smartphones, customers now have 24 by 7 access to their finances literally in their pocket. But it's not just about checking balances or making transfers anymore, because mobile banking has enabled entirely new use cases that previously required physical presence in the bank branch. So now let me give you some example of these transformations. Today, for example, customers can open new accounts, apply for loans, and even receive personalized financial advice, although they're and all through their mobile banking apps. So think about how revolutionary this is, because processes that once required multiple branch visits and paperwork can now be completed within minutes from anywhere. And what's particularly significant about mobile banking is how it's democratizing access to financial services. For example, in remote areas or those with limited time to visit physical branches can now access full banking services. And this is why I believe mobile banking isn't just a convenience feature. It's becoming the primary channel through which financial services are delivered to consumers. So the next slide. And now let's discuss a technology that's democratizing access to investment management, like robo-advisors. So this is a perfect example of how automation can make sophisticated financial services more accessible and affordable. So what makes robo-advisors particularly interesting is their use of algorithms to provide automated portfolio management, trading, and rebalancing services. And these platforms can determine an investor's goals and risk tolerance as well, and then create and manage a diversified investment portfolio accordingly. So the best part, what is the best part of them is that they do this 24/7 without human intervention. So, and let me share some compelling numbers with you. Currently, robo-advisors manage over $1 trillion in assets globally. So you should imagine that. What's particularly significant about this is the cost structure, because the robo-advisors typically charge much lower fees than human financial advisors. And this means that professional investment management, which was once available only to wealthy individuals, is now accessible to a much broader range of investors. And what I find fascinating is how these platforms are continuously evolving. So they are not just passive investment tools anymore, because many now offer tax loss harvesting and socially responsible investing options, and even hybrid models that combine algorithmic trading with human oversight. And this is why I believe robo-advisors represent the future of retail investment management, even. And the next slide. Let us discuss a fascinating innovation that is reshaping lending market, which is a peer-to-peer lending. So this technology is fundamentally changing how people and small business access capital. So what makes P2P lending particularly revolutionary is that is how it cuts out the traditional banking middleman. Through platforms like Lending Club, for example, retail investors can now provide loans directly to consumers and to small to medium enterprises. And this direct connection between lenders and borrowers is creating new opportunities for both sides of the market. And let me put this into perspective with some numbers. For example, like P2P lending platforms have originated over $50 billion in loans so far. And that's a significant amount of capital that's been channeled directly from investors to borrowers. And what's particularly exciting is how this is increasing access to affordable capital for many who might have been underserved by traditional banking institutions. And the beauty of P2P lending lies in its efficiency, because by leveraging technology to automate credit assessment, loan origination, and payment processing, these platforms can operate with lower overhead costs than traditional banks. And these cost savings often translate into better interest rates for borrowers and potentially higher returns for lenders. And this is why I believe P2P lending represents a significant step forward in democratizing access to capital. So the next slide. What is about the challenger banks in terms of disrupting retail banking? There is a rise of challenger banks here in this sphere, and these digital-first institutions are fundamentally reshaping how we think about banking services. So, what makes challenger banks like Chime, Monzo, or Nubank particularly interesting? And this is how they are using technology to compete against traditional encumbered banks. And these institutions are built from the ground up with a modern technology stack, which allows them to offer something truly different. For example, a sleek, user-friendly banking experience with significantly lower fees than traditional banks. And let me share some numbers to illustrate their impact. For example, take Chime, for example. They have already attracted over 12 million accounts. And that's remarkable about this growth is how quickly it happened. These challenger banks are acquiring customers at a pace that would have been unthinkable for traditional banks. And what I find particularly fascinating in their approach to banking, that is, instead of trying to replicate everything traditional banks do, they focus on specific customer pain points and solve them exceptionally well. And whether it's yearly access to paychecks or no-fee accounts or instant notifications. So they are showing how technology can be used to create a more customer-centric banking experience. And this is why I believe challenger banks are not just a trend, but a glimpse into the future of retail banking. So the next slide. Now let's think about a trend that's reshaping the competitive landscape of financial services, which is the entry of major technology companies into the finance. So this is really fascinating development that's blurring the lines between tech and financial services. So, what makes this particularly significant is how companies like Apple, Amazon, Google are leveraging their massive existing user bases to offer integrated financial services. And these aren't just simple payment solutions anymore, because we are seeing these companies expand into credit, investment, and other traditional banking services. And what is of the most interest here is that this trend is, in terms of this trend, is its unique advantage, data. And these tech giants have deep insights into the customers' behaviors, preferences, and spending patterns. And they are leveraging this knowledge to create highly personalized financial products and services. And if you think about how Amazon knows your purchasing habits or how Google understands your daily routines, now imagine that knowledge being applied to financial services. The implications are profound because these companies don't need to build their customer base from scratch. They already have millions or even billions of users who trust their brand. And by integrating financial services seamlessly into their existing ecosystems, they are creating new, convenient way for people to manage their money. And this is why I believe big tech's entry into the financial industry represents a significant shift in how financial services will be delivered to the future in the future. So on the next slide, And another very fascinating thing is biometrics, which for sure enhances digital security. Because these biometric technologies are really revolutionizing security in digital financial services. So as we can see, biometric authentication methods like fingerprint scanning, facial recognition, and voice identification are becoming increasingly prevalent in the financial sector. So, what's particularly impressive is that fingerprint verification systems have achieved up to 98 accuracy rate, making them really incredibly reliable for securing financial transactions and data. And this is a significant improvement over traditional password based systems. And when I work with banking clients, for example, I often emphasize that biometrics offer a unique combination of enhanced security and improved user experience. And you can think about it instead of remembering complex passwords or carrying authentication tokens. For example, customers can simply use their inherent biological characteristics to access their accounts and authorize their transactions. So, and in my experience, this technology is particularly valuable because it addresses two critical challenges in digital finance. First, security and convenience. And banks are increasingly deploying these solutions across their digital platforms. For example, from mobile banking apps to ATM access and even in-branch authentication systems. So, and I should also mention that what makes biometric authentication particularly powerful is that biological characteristics are extremely difficult to forge or to steal, unlike passwords or PINs. And this significantly reduces the risk of identity theft and unauthorized access to financial accounts. So, let's turn to the key takeaways of the previous lecture. So, first, I want to emphasize how new technologies, particularly mobile banking, artificial intelligence, and blockchain, are fundamentally transforming the financial services landscape. So we are seeing innovative products, new distribution channels, and completely reimagined business models. And from my research and industry experience, so I can tell you that financial institutions that adopt emerging technologies see significant improvements in operational efficiency and in cost reduction also. And however, I must emphasize that this requires substantial upfront investment, a critical point that many organizations overlook. So, what I find particularly fascinating is how big data analytics and artificial intelligence are enabling hyper personalized financial services here. And another critical and crucial development I've observed is the rise of API driven open banking ecosystems, for sure. So, and however, I must stress two critical challenges like cybersecurity risks and legacy system integration. We have run out of time actually. So, therefore, I will not ask your question, but if you have any questions, please do not hesitate to ask me. So, any questions? So,
No
if you do
questions.
not, yeah, thank you. If you do not have any questions, so I wish you good luck and see you next week, Ben. Thank you for your
Thank you,
time.
Professor.